Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Scott Bauer, CEO of Prosper Trading Academy. Great to see both of you all. Scott, you again. I know we just talked earlier this morning.
Yes.
All right, first up on your list, you've got UnitedHealth. It is lower today, down a little more than 5%. Tell us what your views are on this one.
I mean, what a tough report they had last week and a tough stretch this stock has been coming through. But you know what? We're coming down to a real critical area right around this 430 area or so. So I'm not necessarily looking for the stock to make a roaring comeback. I am looking for this area to hold as some support here. And I think this is probably, looking at the charts, as good of a place as there is. So based on that, I'm looking to collect some really expensive premium, and I'm selling next week's 430, 420 put spread, collect about $4 for that. I want to buy UNH around 4.25. If it gets there, break even on this is 426. I think this is a decent opportunity here.
Okay, so Rick, Scott made a great point, especially about all that weakness that we saw off of that really difficult report for UnitedHealth. Take us through what the chart tells us.
Never a good sign for the bulls when I have to fiddle around with the axis to fix it so you can see how low the price has gotten. I guess I'll just say that as my opening comment here. But making new lows today, 429.02 is where we're bottoming out so far. Very heavy volume during this major decline that we saw on earnings. RSI interrupted momentum, shifting toward the oversold area, that threshold of 30 here. And, you know, really, we're so far below our moving averages and any relevant shorter-term patterns here. You know, I don't even want to bother spending too terribly much time on this chart here. We do have this confluence. All of our moving averages are kind of clumped together around 530 or so. That could be one interesting upside area to keep an eye on here. But we broke through those old lows, 438.50, pretty resoundingly below that mark so far now. And if we were to include our standard deviation channels and volume profile studies here, we can see that the high point of where we hit after our gap down matches up pretty closely with our volume profile point of control. So right around 490 seems like another important upside area. Once again here, messing around with my axis a little bit to make sure we can see the area I want to point out. -3 channel, standard deviation channel, 3 standard deviations below our line of best fit, our linear regression line, 412.61. So that could be one downside area to watch as well. And if we were to quickly look at our 5-year chart here, you can see that the picture is unfortunately not really much prettier, because we have this long-term green line here, 440, all the way back here, lows, you know, lows, and then we're breaking through to the downside. The weekly -2 channel lines up about with this volume node here, so maybe around 410 could be one area to watch.
Okay, that's an area to watch. Scott, I want to send the floor back to you. Is there anything that you have to keep in mind, any potential event risk or just overall market sentiment with this strategy that you chose?
Yeah, I'm not sure it's event risk here at all. I think it is more market related. We know the news that is out there right now. We know that it has been in just a horrific pattern, as Rick pointed out here. I just see the opportunity to see some stabilization around this rate here, or around this level here, and collect some really expensive premium.
Okay, let's move on to your next trade, the Spider Gold ETF. Looking good today, looking good so far this year. What's your views on this?
I'm sorry, can you repeat that? I'm sorry.
You've got GLD next up on your list. It's, you know, to me, this looks like seems like a proxy play for gold. What's your views on this one?
Yes. Well, I'm not trying to do the opposite of catch a falling knife here, which, you know, people will look at when a stock really drops, maybe even in the UNH circumstance there, and say, okay, I'm just going to step in and try and buy this. This is, you know, really kind of the opposite on the upside here. And to me, gold is so overextended. It really is. Now, you know, people will look at that and say, well, this is the absolute best, you know, risk off play that there ever has been in the history of the markets. And people are piling in. I think we're going to get a little bit of a respite. I'm not saying that gold is going down 2, 5, 10, 20% from here. I think we are going to level off. So because of that, I am just going to put on a very inexpensive short-term downside play. And I'm buying a put spread that goes out to May 16th, the 305, 295 put spread, and pay $2 for that.
Okay, and then Rick, so what are you paying attention to when it comes to the chart here?
Yes, I see Scott's point. When everyone's piling in on one side, it kind of makes you wonder, what the opposite side, how that could play out for you. And when we see here, this is a very different chart from our last one, kind of the reverse situation where we're making these highs, pushing to the upside here. Our 252-day exponential moving average, just to point out, all the way down here near 245 when price is at 316. So it's been a very sharp, very strong push to the upside in recent months here. And even our short-term 21-day EMA is so far away at this point, it's not really super helpful here. So I guess I would just point out one last thing on this chart. Very heavy volume recently, lots of volume spikes as like we said, the people are starting to pile into this trade. So if we were to advance our charts here and kind of look at our situation, now I have to adjust the axis to look at the upside here. So we've got our +2 channel, our standard deviation channel there, +2 standard deviations to the upside from our linear regression line, right around 323.58. Not saying this is where price is going to stop or anything. What this is telling us is this is a relatively extreme point from our idea of fair value, which is that linear regression line, and that's one place you could start to look for potential upside there. So we can also see the only real volume node of note comes in just below 300, where price had this very brief consolidation phase here. And to look at our longer term chart, once again, really interesting here because we can just see how strong the move up has been. I would also say too that we kind of have a confluence here between our two time frames. Our last standard deviation channel to the upside in our yearly chart was right about at the same level as our weekly +3 standard deviation channel. So this one's right around 326. So that could be lend some greater emphasis even to that area in question.
Okay, shares of GLD higher today, up more than 2%. Scott, I want to take a look at your final trade. You've got T-Mobile on your list. It's had a banner year, especially when you compare it to the broader market. It's certainly outperformed the S&P 500. Tell us your views on this one, your approach here.
This one really is a standout compared to the rest of the market. And we have drifted down a little bit towards the 50-day moving average, which if you look over the last couple of years, that's actually been a big line in the sand, a big area of support for this stock. Earnings are coming out at the end of the week here. I really think that we could see a really nice earnings report. I know, many people are looking for many companies to give awful guidance or cautious guidance. I think T-Mobile is one where we could see a real nice bounce here. So I'm buying next week's 265, 275 call spread. I can do that for about $3, maybe a little bit less here, and looking for a nice pop off of earnings.
Okay, potential pop off of earnings. Rick, let's take a look at this chart for T-Mobile and take us through how you would describe the technical look at it.
Right, pretty much looking for a return to those highs. 276.49 was where we topped out in terms of our intraday price. From there, we've been trending lower, trending downward with our white dashed line here. But it's a chart that's really held up quite a bit better than much of the market. Still up more than 60% off of those lows. And you can see that we held this green line, those old highs, and then our subsequent lows. We did make some intraday fluctuations below it. But 248, for the most part, was where the bulls were able to make a bit of a stand. Now, we can see, though, that after failing to retake that trend line, we are moving below our yellow 21-day EMA today. That level near 259 could be one area to watch here as during a rather tumultuous market day here. RSI also crossing below that 50 midline after failing to make a big push above that red trend line there. So kind of downtrend still in play on both sides here. Nevertheless, though, almost more range bound really than down. This was such a crazy time of price activity here. I almost don't even want to really consider it the same way I would the rest of the price activity here. It does give us some extreme low points to watch here. But notice as well that the lows came in right where we started seeing heavier volume here. So around 240 was a key area. That's about where the bottom came in thus far. So we can see here another volume node here near about 265. Linear regression line lines up with our trend line near about 276. So that's an upside area to watch as well. Quick look at our 5-year chart here. We can see that the heavy trading, the volume profile point of control, all the way down here, very, very far below. So the rise has been swift, and we can see that there's not really a ton of clear nodes to keep track of here near where we are now. But to the upside, our 5-year +2 standard deviation channel comes in just above 282.
Okay, all right, that's a look at the chart for T-Mobile. Shares under some pressure today, but certainly has had a strong year so far. Our thanks to Scott Bauer, our Prosper Trading Academy, and of course the Duke of Data himself, Rick Ducat. Thank you both.